Bitcoin and the crypto ecosystem are in a critical context. As you can see, Bitcoin has just worked through an ascending wedge that has left us with a gap. In other words, buying weakness, which has been unable to come into contact with a very relevant macro structure, while Ethereum has indeed made contact with its structure and started its downtrend. What I'm telling you about Ethereum right now, what it's telling us about Bitcoin, is that this gap exists, and it's important to take note. Now, to give you some context here, you're looking at Ethereum's macro ascending wedge that has made contact with a relevant structure. Meanwhile, Bitcoin has created that gap, as I just explained to you. But now, let's step back and get a bit of context, because I must warn you that what we're seeing in the entire crypto ecosystem is highly critical. Now, you're looking at Cardano's chart, something like the representative of altcoins, and we see how they've set up a macro structural trap. And frankly, as this confirmation comes in, it's giving us goosebumps. It's important to recap. Let's go to the daily time frame for Bitcoin. Besides working within a macro bullish channel, remember how we were evaluating this bearish impulse where we were saying, hey, here we have our W, this is a weak I, and we're heading towards a Z that we speculated would end at the origin structure of the breakout. As an origin breakout structure often gives significance to reaction zones. In fact, the price reacted but didn't evolve. Perhaps what we were expecting before, clearly, was to continue long. What do I mean by this? I remember some time ago, people from the community would come to me asking, hey, what about that Z? Isn't it continuing? To which I replied at the time, well, it's a possibility. But as soon as we saw the breakout of the breakout origin, we saw and categorized this event as a black swan, as it was an unexpected event that brought significant aggression. And after that event, what we had to prioritize was to continue long. That's why we were so positive about the crypto ecosystem once we saw that the breakout origin didn't do its job and the black swan was confirmed. But now let's revisit the question a colleague, a member of the Crypto Insight community, asked me, hey, what if that Z, this wasn't its end, but rather it continues? In response to that, we'll see. Now we've seen how it's evolved, and what we're seeing is that the Z has simply gained a lot of momentum. Remember that a ZR can even surpass the starting module of the bearish impulse. That's why we've exceeded historical highs. This, in the world of Zs, is a completely normal. And if we then transfer this analysis, first I'm going to talk to you about theory. This is not a prediction. Mind you, I hope it's clear. This is not a prediction. If you want, I can also tell you in another language. What follows is not a prediction, it's just theory. What does the theory tell us? That when we experience a complex corrective pattern that leads us to such an aggressive Z, there will be a bias towards looking downward. What will be the target? The guideline of the corrective pattern, this whole giant line I'm drawing for you in yellow. Truthfully, it doesn't necessarily have to break it, it may not even reach it, but there is a directional bias. The theory is over. Remember, this is not a prediction. Did you think it was? Well, here, we're going to look at the Ethereum chart. And notice, the Ethereum chart in its daily time frame is showing us that we're working within a macro bullish channel. And do you remember when we were saying, do you realize how Bitcoin has come to break its all-time high? And yet, we see that Ethereum hasn't. That got us a bit on edge. But the most important thing was that Ethereum was showing us in a much clearer and evident way that we were still working within that complex corrective pattern with such strong and aggressive acceleration that, of course, when the price surpassed the breakout origin, once this was broken to the upside, we clearly prioritized long positions because this momentum, well, who could dare to stop it? Do you realize what we're doing, right? We don't want to predict the future because that's impossible. What we do is track smart money and understand what we can expect from a probabilistic perspective. What is more likely to happen next after a certain event. Having said that, here we have that bearish impulse. Clearly, it's very clear here how we have the W, how we have the I here. Poor thing, and this aggressive Z, oh my. If anyone doubts that this is a Z, they should eat a Z. What I mean is that this Z is super evident, more evident, and it doesn't come out of nowhere. Look, we had talked about it before, but from here, a distribution process begins that initiated the whole bear market. That phase, that market stage that the average investor loves so much. Clearly, most people detest the bear market, and I ask you, hey, why should we detest it? Are we not speculators seeking to profit from the financial markets? You also make gains when prices fall, you know. Did you know that the big fortunes of major investment funds don't always, of course? But those special ones that draw a lot of attention, the largest ones, when they benefit greatly from a period of time, coincidentally, it aligns with crises. The lesson here, in a bear market, well, we can still seek our profit. So don't be afraid of a bear market hypothesis. Don't be afraid, it's not bad. And hey, frankly, from Crypto Insight, we don't know if a bear market is coming. Who does? We're simply deciphering what smart money is showing us through the price structure. And with what I'm about to explain next, believe me, you won't stay indifferent. Now let me explain it to you. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Okay, I think it's time we start zooming in a bit. You already know the macro context and you know the potential consequences of encountering a Z pattern. Alright, let's delve into a 1-hour time frame. Well, very often, Z patterns are treated with a wedge as a form of compression. Basically, they make it smaller and smaller until they decide to break through it. And when they break the Z patterns, their wedges, they tend to do it with great aggression. A great aggression that we have already seen in the markets. You're seeing it yourself. At the same time, they usually work on their own guideline, and there's no doubt that we are facing a distribution pattern. And we are also able to identify a slightly broader guideline that encompasses all this compression around the POC, the level of highest transactional volume that gave rise to the macro distribution of the bear market. Alright, this is already broken, it's a fact. Okay, we've seen that we just broke through a relevant price level, very macro with great aggression. What is providing some support to the price? This defense zone, which if you ask me is doing a temporary job, a temporary role. It won't be infinite. And if we now look at the Bitcoin chart, also in its 1-hour time frame, what we are seeing is exactly the same. Its Z pattern has compressed into a wedge and has broken with great aggression, as you can see. As you can observe, we are not making anything up. Smart money moves markets in a predefined way, which is no surprise to our Crypto Insight eyes. If you want to see and understand financial markets as advanced and real as we do here, and if you're not subscribed to the channel yet, I honestly wonder what you're waiting for. It's your moment. It's your opportunity. So subscribe to the Crypto Insight YouTube channel and click on the bell icon, to get notified when we upload a video. Now, regarding Bitcoin, yes, it has broken the wedge. Here we have the XY trendline, which is nothing but a potential distribution, which we see has broken its creek, its relevant level, and how it has done so forcefully to validate. And that's where we are. Who is the best friend of the bulls? Well, the defense zone, here we have it. Here we have a level that is holding the price, basically. As long as this level holds, we won't see the start, or rather, the continuation of falls in the crypto market. But we are saying that in any case, we are facing the last of the frontiers. And as I said before with Ethereum, I wouldn't trust too much that it wants to play a leading role in this mess. The one-eyed man said it. And now let's go to the Cardano chart. Let's get perspective to the daily chart. And what do we see here? Well, look at how they anchor us to the price. Super clear, super evident. Look at how they confirm it. Hey, what did it look like here? They wanted to go to the sky, right? At first glance, that seemed to be the case. And mind you, I'm not saying that this still can't happen. You still don't know our market sentiment. You'll know soon, but I haven't told you yet. So don't imagine words you haven't heard yet. Back to the point. We have a relevant level. It's the white horizontal line. Here we see how the price has tried to break it. In other words, they distributed us here and came back with great aggressiveness. What does this mean, folks? What does it mean? It means that if the price of Cardano were able to come tomorrow and validate the structure, so to speak, maybe with a small but timid trap, and doesn't break it, and this ends up being a defense zone, we could say that the institutions that distributed here would be defending their position, and frankly, this would paint anything but a pretty picture. Do you understand what I'm saying? Here's a question. Do we believe we know the future? The answer, no, we have no idea. We simply hope that if a very specific scenario with a lot of foundation happens, then we can expect a consequence with higher probability, but always with the risk of failure. No. And now let's see our great friend Solana, the big snitch. Well, it was that cryptocurrency we were going to follow up on because remember we were working on the wedge differently. I don't remember anymore. that we had to readjust it according to the evolution of its price, because honestly, did I not believe this rise? Really? Who believed this rise? I mean, they're compressing it. Here we have the smart money behind it, something I can say definitively. And what were we saying in previous videos? Hey, we don't know if it will happen, but if we see that the wedge is getting smaller, and smaller, we will expect a strong and aggressive bearish breakout. As long as Solana rises, cryptos from the perspective of a cross-sectional technical analysis may continue to rise. But But when the Solana wedge breaks aggressively to the downside, perhaps it will be time to prioritize shorts in the market. That's why we are monitoring this wedge, as at some point, imagine if they do it soon and making a strong bearish impulse. Here, be very cautious because bearish stretches could come in the crypto ecosystem. Don't use this as a prediction, but rather as a concept of an indicator. Because if this keeps rising, you can keep doing it, and we will keep working on this wedge until it tells us when it's time to start looking down. As I said, we were observing that a strong bearish impulse could come at some point. Regarding that strong bearish impulse, they have worked on their own structure. In other words, the Z trend line that has already broken, validated, and continues to decline. And now, how are we going to use Solana? Well, after a strong bearish impulse, smart money is monitoring its price with this trend line. Therefore, as long as this level is respected at most, generates some trap scenario for us, but if respected, we can continue the bearish path. We'll see. And now let's analyze Ethereum, the one you're waiting for the most, Bitcoin. As for Ethereum, this defense zone is going to be key, at least temporarily. That's why it makes sense for the price to be rising now. We'll see how long. And as long as the price is not able to recover this structure, we're going to keep thinking about looking down. Basically, if we see that the price comes to look for this structure and it's not able to recover it, maybe with a trap, who knows, it would make sense for the defense zone to be lost. And if the defense zone is lost, there's no one left to hold us, not infinitely to go to lower or micro levels. But hey, at least because they're not going to try to find a replica in the market. As I said, not infinitely. But if everything I'm telling you happens, and in this order is what we could expect. And as for Bitcoin, we're going to use its creek as a relevant level, of course. We're going to give it room to rise, if it feels like it. If this level is respected, hey, maybe with a trap to look for some kind of POC, who knows? If the creek is respected, it makes sense for us to threaten the defense zone. And if this is lost, as I said, we will go look for a bearish replica in the market. As you can see, a priori, it doesn't have to be something wild and something that sends us to zero. It doesn't have to. But this gives us a lot of information. Everything I'm giving you in this video, if we saw this type of behavior in Ethereum and Bitcoin, then we could expect bearish continuations in the market. As I say, we don't pretend to predict the future, since nobody can do that. And that's when we put on the table what we have to see in the chart to dismiss this bearish idea. Well, what we would have to see is how this structure, this level, is broken to the upside and confirmed. Basically, hey, let's see what they do to us, right? Maybe they put us through an accumulation process, who knows? They break us, and if we see that this structure, hey, is broken, the trap zone is surpassed to form a flat pattern and this continues. Then here, we would start talking about a macro range and we would talk about a bullish climactic action. But hey, you see, the events that must happen are very far away. The preference, without seeking to predict the future, today is to be bearish in the long term. So if you then see that the price goes up in the next few hours or days, buddy, don't go crazy. The bearish idea still stands. Wink. If you liked this technical analysis, let me know in the comments. Also, support Crypto Insight by liking this video, subscribing to the channel, and clicking on the bell icon so that YouTube notifies you of future uploads. And of course, share this content with other trading and cryptocurrency communities that you think may find this content useful. And I wish you good luck in your trades. Until next time.